To build discipline, folks, you're going to have to grit your teeth and stick to the process. So the first step would be to sit down with one of these guys, sit down with Bussy, put together your trading plan, a simple mechanical plan. The more mechanical, the better. And then my challenge to you folks is to follow that plan without deviation for a batch of somewhere between 20 and 30 trades. Now, that's going to take quite a bit of doing. It is a rite of passage. Now, I'm not a psychologist, and I've had psychologists in my classes, and they still don't know why this happens. But to build a habit, okay, any habit, you've got to grit your teeth and do it. And then all of a sudden, you actually build this neural pathway between your ears by doing it. You're going to find that sticking to the rules for the first few trades is difficult, but I've done this with many, many people over the years when I used to do one-on-one mentoring. I don't do it anymore. Somewhere between 5 and 13 trades, you build the pathway. And you'll find that the discipline to stick to the rules is no longer required. So, the one thing that I can say which is positive, that everybody in this room is 8 to 13 trades away from the trader you want to be. That's all. But very few people get there because they don't adhere to the one system until that neural pathway is built. So that's the process if you want to be successful, folks. Sit down, put together a fairly simple system, adhere to 1 to 2% position sizing, and then the real work starts of being able to follow that system through thick and thin. And you're only about 8 to 13 trades away from being able to do that. That's all.
February 5th, 2026. Let's go over the trades we took today. And in the NASDAQ, TQQQ and NQ futures, we've been building momentum to the downside. All you have to do every day, before the day starts, and after the day comes to a close, just look at the momentum on a daily level, on a daily chart. So this is the MACD histogram representing momentum. And 5 market days ago, we had a tipping point, a turning point where the momentum stalled. And then we had a verification, a confirmation that momentum had changed directions from buying to selling. So as these market days unfold past that moment, we have a bias towards selling pressure. We have a downward bias. And this bias is validated even more with volume confluences, when we get volume coming to the party. So before the market even opened today, we knew we should be looking out for sell-offs. We should be playing the short side of things. Let's see what happened today. Today in the market, we had a more or less choppy day. We finished down. There were some aggressive sell-offs that you could have captured, that's for sure. I'm sure you can see them. They're quite obvious. You can see these movements here. We're going to go over the trades we took. The first one we took was at 9:12 a.m. And I took this trade because I jumped the gun. I accidentally, I thought that this histogram bar actually had popped down to the downside. And I saw that we had a volume confluence, volume greater than the previous 3. But it didn't. It actually it stayed kind of flat. So I normally wouldn't trade that, but I did enter the position because I thought it did pop down and everything else was aligned. Our higher time frames were aligned to the downside, which is what we need. Enter at the close of the candle. Right when the candle closes, you enter the position, stop loss slightly above or at the previous candle, depending on what the situation may be and how big this entry candle is. So stop loss was around here. We took profit at that profit target there. That was a win for the day on trade number 1. The second trade, that was actually trade number 2. The first trade I took today was in Apple, and it was right here because our higher time frames are giving us permission to take short trades. The 30-minute is breaking to the downside. We get a volume confluence right here, volume bar greater than the previous three. And this is a smaller candle, okay? So I actually chose to go halfway. I didn't go all the way to the top of that second to last candle. I decided to play that candle size. Why did I do that? Because I want you to look at this candle. This candle right here, my entry candle, is kind of on par with the average candles that were happening over here. Yes, we had some large ones, but more or less this entry candle right here underneath this yellow line is more or less kind of average or small, kind of small. So when that happens, I put my stop loss either halfway to the next candle or at the top of the next candle. In this case, I didn't go all the way. I actually went a shorter distance, which allowed me to actually take profit and get a win. Had I gone really high up to the previous candle, this would have actually been a loss. So it's interesting to see those distinctions there. So that's 2 wins on the day. Third trade of the day was in Apple a little bit later, right here. The 5-minute data is giving us permission to take short trades, giving us permission. Everything else is aligned as well, looking good. We're already in deep red territory on the histogram. We get a volume confluence, pop down. It's as simple as that. You enter at the close of the candle, stop loss slightly above. It almost hit target. Then it all just basically, maybe 10, 20 cents away from hitting the stop loss. Then it continued down and actually hit target. It's a good win there. Fourth trade of the day was in NVIDIA. I took a mini position size. Why did I take this trade? At this time, we were holding downward pressure, and then when I hopped in, the pressure started to reverse, the momentum started to reverse, so I hopped in at the literal worst moment. Why did I take the position? Because this had popped down, aligning with the trade. We had a volume confluence. That's the entry. Entered at the close of the candle. Target didn't get hit. I got stopped out. I took a very small position because my intuition was telling me this was a risky trade. Why? This is going down. This is going down. The 5-minute, this is the 30-minute, and this is the 2-hour. The 5-minute twins are giving me permission, when I took the trade at least. It was holding momentum to the downside. But the entire market at this exact time, keep in mind, this is 1302, okay? Well, look at this, 1302 for market time. We're going to go to the SPY, 1302. Look at this, 1302 at the SPY. We are now holding an upward move on the SPY, which is essentially the whole market. Let's look at TQQQ. TQQQ at 1302, holding momentum to the upside. So the entire market is actually rising. But I noticed that NVIDIA, when I wanted to take this trade, was not. There was a divergence of information. There was an asymmetry. If the whole market, essentially, I say the whole market, if the SPY and the NASDAQ are going up, but you find a ticker like NVIDIA or Apple or Amazon, and they're not going up, they're actually selling off. That is called divergence. That's a very important thing to notate. So I saw the divergence occurring, and I took the trade expecting this to go down, but it did not. It actually caught up with the market and stopped me out. That was a loss right there. Next trade was in Palantir. Why did I take this trade? Same thing as always. 5 minutes, giving us permission to take trades to the downside. We're on the right side of the momentum. On the 1-minute chart, we get a volume confluence. Enter at the close of the candle, stop loss slightly above. First target, sell 80 or 90% of your position and allow the remainder of your position to continue running to make more and more profits when the market inevitably gives it to you. The last 2 trades of the day were in NQ, NASDAQ. This was a loss right here. I took this trade for really, it was another fake out almost. You can see that this MACD bar right here started to reverse to the downside. So we're going up, and that you don't want to take trades now because we're going for short positions. 5 minutes are going down. We're having a huge sell-off day. The momentum overall is downward, right? So wait for the MACD to reverse. Wait, oh, it kind of reversed here, but no volume confluence. You can see that kind of reversed, pop down, no volume confluence. Keep going, we pop down again right here, but this time we have a volume confluence. So that's why I took the trade, because that is the entry. But it ended up not producing anything, reversed big time. That was a loss. Got stopped out right here at the regular stop loss. Last trade of the day. Later on, the final 20 minutes of the day, 15 minutes before the end of the market, we're popping down. The 5-minute momentum, strong to the downside. We get a volume confluence, but this time it's not a traditional volume confluence because this huge green candle here. This is what's called a 2x3 volume confluence. And a 2x3 volume confluence is where you have 3 consecutive volume candles. The last one is greater than the first one, and two out of 3 are aligned with the trade. So if you're taking shorts, 2 out of 3 are going to be red. If you're taking longs, then 2 out of these 3 are going to be green. So it's a 2x3 arrival. It's a slightly different volume confluence as opposed to the power volume confluence that I normally use. So regardless, we entered right here at the close, stop loss up here, target was hit. Wonderful, wonderful win there to close out the day. And today is a special day. Today is February 5th, and I'm going to tell you what happened today. I completed my rite of passage. My mentor and a gentleman I look up to very much so in the trading world, he's not with us any longer, David Paul. He always stressed about the idea of going through the rite of passage, which is about 13 to 25 trades, somewhere in there. Everybody's a little bit different, but we'll just take 16 for example, because that was mine. Going 16 trades without interfering with the rules, without interfering with the trade. You can't take profits early. You have to follow your stop loss. You got to follow your sizing rules. You have to follow every rule for X amount of trades in a row. And if you fail, say on number 14, you got to restart back to number 1 and go all the way another 16. That's the rite of passage. I've tried it many times, and today I finally finished and completed the rite of passage in the name of David Paul. Thank you, sir, for everything you've done. And it's worth it. All developing traders must go through it. At least, in my opinion, they should. And with that being said, I'll see you in the next one. Take care now.